crypto season, Caesar Capital. Hope you're well. It's the 16th of March, 2024. We're going to look at Bitcoin. We're going to look at a pretty heavy bullish price target. But before we do that, let's consider the position of the market at the moment and the power that we might need to get to this target. So the first thing is this, is that, as we know, the ETFs are a resounding success. They're the most successful ETF ever launched, and the inflows to the ETFs are significant at the moment. And to be honest, I don't really think that that is going to slow off anytime soon. They really are pushing these ETFs, and I think more and more people are going to slowly come into the market over the next sort of 3 to 6, 12 months. And so if you check out the Rational Root on Twitter and have a look at some of his charts, you'll see that he's got an interesting chart which indicates the average net inflow of ETFs. And the average net inflow of ETFs at the moment is 4,500 Bitcoins per day. Okay, so that's quite a lot. And if you consider the total trading days in 1 year, it's not 365 days, it's about 252 days. The NASDAQ trades, I think the New York Stock Exchange trades 251, but we'll put 252. So essentially 252 times 4,500 is about 1.1 million. It's 1,108,800. So it's about 1.1 million. And then if we have a look at the total balance on all exchanges at the moment, so this is what you might call the operating float. So this is the Bitcoin that is able to be traded on the open market. And we could call this the operating float. The operating float, as it stands, is about 2.2 million Bitcoin. Okay, 2.2 million. So it's 2,282,540 Bitcoin. So about 2.2 million Bitcoin. So essentially, in 12 months. We can anticipate that essentially the ETFs alone, on their own, will suck up 50% of the total balance of Bitcoin on exchanges. And that's a significant amount, if you ask me. And it's going to cause the price to move to the upside, because the operating float isn't very big. The average net ETF inflow per year is going to be about 1.1 million. So it's going to shave the operating float in half. And then, of course, we have a halving, which is about to occur in the next sort of 28 days or so, which is also going to cause a further supply-demand issue, which should, in my opinion, push the price further to the upside. So that's pretty bullish if you think about it. Okay, we've only got 2 million coins on exchanges. The operating float's 2 million, and half of those are going to be bought by the ETFs in 12 months. Okay, that's significantly bullish in my view. Plus the halving coming up very soon. All of these, in my view, are catalysts for the price to move to the upside. And of course, this doesn't count people who are buying Bitcoin through retail exchanges, so through Binance, through Coinbase, through, wherever. That doesn't get, this is just simply the ETF net inflows. Okay, so they're going to take half. Okay, and I'm sure there's going to be quite a lot of FOMO around this, and other people or other market participants who aren't going to use the ETF, who will buy in the normal traditional way, will continue to buy Bitcoin as well, causing further pressure in relation to the supply and demand issue, which in my view is likely to push the price significantly to the upside. Now, this is a technical target. Okay, I don't want to go crazy moon boyish. I'm not really about price targets. I'm more about timing the market. I think timing the market is far more important than having actual technical targets, unless you're trading, you're day trading. But if you're looking to take profit when the market is high and take position when the market is low, it's more about timing rather than actual targets. Okay, so for me, it's more about timing. It's more about looking to see when I'm buying, if the market is oversold, and looking at lots of different indicators, sentiment, etc., and using my experience to judge when it's a good time to buy. And again, conversely, when the market is overheated, when it's overextended, looking at lots of different indicators, looking at on-chain indicators, looking at momentum indicators, looking at sentiment indicators, etc., to tell me when this might be a good time to start being defensive in your position, to start taking profit in your position, to start setting stop losses and taking some chips off the table. So for me, it's more about timing rather than price. But there's nothing wrong with having a look at some price, because if the price is in the sort of technical target at the point where you think the market is overheated, then that's further confluence for you to think, right, okay, I need to take some chips off the table. Okay, so this is the technical target. So we've got this structure of Bitcoin on the weekly time frame. It's a big structure, and you can either call this a cup and handle, potential cup and handle pattern, or a complex inverse head and shoulders. Either way, the way to measure this is to measure from the breakout point down, so the neck or the top of the cup down to the bottom. Now, what I've done here is I'm going to measure it from the candle body rather than the wick. So I'm going to measure from here down to the bottom of the candle body there. Then you place this on top of the breakout point. It gives you your technical target, and the technical target is about $267,000. So pretty bullish technical target, to be honest. But I think this is possible during this cycle. I think it's to the sort of upper end of my bullishness. I certainly don't think this is a conservative target by any means. But then if you wanted to measure it from the top of the wick to the wick at the bottom back in November 22, I think it gives you kind of about a 300K target. So yeah, about 300K. So again, fairly bullish target there. But these are things to think about, because it is quite possible with the supply demand issue, with the fact that we have institutions involved now. The level of buying at the moment is quite significant. So these sorts of targets, we can't ignore them, but we've got to sort of say to ourselves that, these are extremely bullish targets. It may well be that Bitcoin doesn't reach these targets, but certainly if Bitcoin is in the realm or in the zone of these targets, when we think the market is overheated, when we look at all of the indicators which suggest to us that it's time to be defensive and to take action on our positions, if at that point the price is in or around those technical targets, then I think that's further confluence to suggest that, it's a good time to start taking some chips off the table. Also, interestingly enough, if we were to measure the FIB extension, so the trend-based FIB extension, so obviously 3 anchor points. The first anchor point, so this measures a trend, or it tracks a trend, and it gives you a basic upward target in the future of where the price might go. So we measure from the bottom of the last cycle to the top of the last cycle down to the bottom of the last. Okay, so you've got 3 anchor points: bottom, top, bottom, follows through the cycle, and it kind of gives you these targets. The 3618 being up at 245,000. So not far, really, is it, from this sort of $268,000 target. So, there's a little bit of confluence there that this area of 200 to 260 to three sort of 2 to 300,000 basically might be you know, a pretty bullish target that we should consider keeping our eyes on. But as I say, you know, for me, markets are more about timing rather than price. I think it's a bit of a fool's errand sticking to a price unless your price is fairly low. Sticking to a fairly high price and saying, I'm not selling my Bitcoin until it gets to this price, because it may not ever get there. Because, you know, it may well be that Bitcoin is super overheated. There are lots of things indicating to you as a market participant at about 150, 160K that it's time to act defensively. And it may well not have reached these higher targets. But, you know, it's all about timing, really. And time is on our side at the moment. It seems to be that Bitcoin's consolidating at the moment. We've got the halving a couple of, well, 28 days away or so. It'll be interesting to see what happens in the future. But that's a fairly bullish technical target. But, you know, it's certainly something to consider, and certainly something that would not surprise me in this market. And by the way, I mean, if Bitcoin were to reach the price of 265 or whatever it was, this price up here about 264, 265. Let's have a look to see whether that would be actually a diminished return. So the return, let's measure so from the low in December 18 to the high in November 2021 was 2,000% move. And then the low this time round was here. And if we were to go right to the top of that 300K, it would technically be just a slight diminished return. If we were to hit the 260 to sort of 40, 260 target, that would be a significant diminished return by 500%. And then if we hit the sort of the 180, that would be a diminished return by, you know, a significant, you know, less of 1,000%. So a significantly less diminished return. So it's 1,000% to 186, of 2,000% from the bottom of the market in this cycle to the top. So all of these are technically diminished returns. So, you know, in the grand scheme of things, they're not ridiculous targets. They're extremely bullish targets, have to accept that. I'm a conservative person when it comes to investing and trading, but they are not particularly moon boy targets, but in my view, they are absolutely possible. Anyway, that's the video for today. Hope you enjoyed it. We've got some months now to go in this phase of the bull run. Things are heating up now. Things are getting interesting. Now's the time really to take position. At the moment, at Caesar Capital, we are continuing with our 50% Bitcoin position, 25% Ethereum position, and then 25% in 10 different altcoins spread across 5 new altcoins and 5 old blue chip established altcoins. We think that's a really good sort of basket, as it were, of digital assets, which should serve you well in this bull market. If you want to learn more about that, you're more than welcome to reach out to us to join the group. You can either reach out to me directly on Twitter, or you can follow the link in the description to the website and send us an email, and we'll get you in the group straight away. All right, take care. Have a good day. Hope you enjoyed the video. Bye-bye.